Greetings and good day. I hope you're doing great. I'm here with you for the daily Bitcoin analysis on the 18th of May. Last week, after Bitcoin rose up to the 50% level of the weekly FVG, it reacted to this area and recorded the largest drop in the past 2 months. Bitcoin closed last week's candle at the $77,450 range.
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
Now we're on the first trading day of this week, and following the decline Bitcoin has experienced over the past few days, today it continued this downward movement and dropped to $76,600. With this price movement, the daily FVG area was filled, and we can consider the next support zone to be the daily order block. We are currently analyzing the inflow and outflow of liquidity in Bitcoin ETF funds. As you can see here, on most days of the past week, there has been a negative outflow from these funds, and on average, over $1 billion in capital outflow was recorded last week. This is the largest negative flow in the past 3 months. You can also see the Fear and Greed Index, which for the first time this month has moved out of the neutral zone and into the fear zone. This index is now at 38. We are now analyzing the 4-hour time frame. After witnessing the formation of a new high at $82,850, the price entered a corrective move. We can still consider Bitcoin's movement to be upward in the long term. And given this, by drawing Fibonacci lines, we can see that during its corrective move, this asset has dropped down to the 0.786 line. Exactly in this area, we have a 4-hour FVG zone, and we are seeing the price react to this range. This area could be one of the most important key supports for the price of Bitcoin, and if we see more support from buyers, the price could move from this zone toward higher targets. If this support zone is lost, the next target for the price could be the 4-hour order block area. To make a better prediction, let's examine Bitcoin's liquidity map. We can see that with the recent downward movement, the price has collected a significant amount of liquidity from the $77,000 range. Now we can consider the main sell-side liquidity at the price of $76,450, and then in the area of $76,077. Within the FVG zones, we can observe internal liquidity, and as expected, the main buy-side liquidity is located above the previous high, at the price of $82,775. We are currently analyzing the 1-hour time frame. Here, by examining the recent candles, we can observe our second strategy. In the area I'm pointing out, we have a candle with a high ATR, and subsequently we saw bearish candles within the shadow range of that same candle. The price has continuously approached the low area of the initial candle, and in the recent candles, we can see that it has collected liquidity below that level, as well as the 4-hour and 1-hour FVG. In this situation, after the sweep candle closes, we can enter a trade, set the stop loss slightly below the sweep candle, and aim for ROR ratios of 1:2 and 1:3 as our targets. Wishing you success and profitable trades.
7 powerful volume trading indicators: footprint, volume profile, and fast scalp. Level up your trading.